right. So strategies. Here's some strategies to be a successful saver. We kind of hit on all of these earlier, but just to reiterate these points, pay yourself first. Make it an important line item on your budget. Write up where your mortgage is. Write up where your car payment is. Write up where your electric bill is. Write up where your tithes is. Put that savings as an important line item. Don't make it if I have something left over, I'll save, because you won't have anything left over. You are important and you are worth it. So pay yourself. Pay yourself and make it important. No matter where you start. Second, set up an automatic deposit into your savings. You can either make it happen on payday, or if your employer is able to split your direct deposit, which is the best way. It don't even hit your checking account. It goes right to the savings directly. It passes go. Do not collect. Do not pass go. Do not collect $200. Go directly to jail. That money goes directly to your savings account, jail.
Right.
It does not even cross your hands. And set it so it's automatic. It happens and you don't even have to think about it, but it's saving and you're building and you're growing. You know, you might think you can't do it, but I promise, if any little bit you start, just start. Set it. Set $1. Set $1. Set $1. Set $5. Set what? I promise it's there. It's there. If you come through it, it's there. You'll find it. And then start as early as you can, especially if you have a long-term savings goal. So time is your best friend when it comes to saving and investing. The earlier you start, the better lifespan you have when it comes to ebbs and flows in the market. And we know we have seen stock markets crash. We have seen the housing market crash. We've seen recessions. We've seen inflation. But when you start early and you put it now, you just ride the wave. You ride the wave. When the pandemic hit, I wish I had never looked at my 401k balance, because it like I had to catch my breath. I knew better. I knew I shouldn't have looked at it. Did it rebound? Of course it did. Of course it did. And so I learned better. So when they started fighting over Ukraine and Russia started cutting up, I didn't even look at it. I refused to look at it, because all those are ebbs and flows. You ride in the waves of the market. Does it rebound? Of course it does. But I'm not that old. I'm old enough, but I'm not that old. I can ride the wave. Now, if I were 65, I wouldn't be playing as risky in the market. I would be in something, may not pay as much interest, but it's safe, because at retirement age, you really don't have the time to ride the waves.
You just save some amount, make it consistent and regular. That's all you have to do. If you say, I'm going to invest $20 a month, just invest $20, just save $20 a month in yourself, invest in yourself, those $20 a month, and just keep doing it. And you'll be surprised at what you're able to accumulate over time.
But time is what allows you to see that. Being able to taking that time and making sure you're consistent. Like, look, I'm a real person. When I started trying to save some money, I put 50 in and I took 50 out. And it would be like, look. And then there are a couple of things you can do with that too, if you're just saving regularly. So you can have a savings account at a different bank. You know, make it at a bank cross town. It ain't convenient for you. You know, you can, some banks, I work for Truist, so I can tell you what we can do. I know we're able to hide that from you online. So you can set up $10 a week to go in there. It does what it's supposed to do, But if you're a person who can't see the balance grow because you'll get finger happy and you'll want transfer it back to the checking and hey, where we going to eat? Hence, as I was, then we can hide it from you online so that you can't see it. Is it there? Absolutely. Is it doing what it's supposed to do? Absolutely. And then the way to get it, you'll have to actually go to the branch to get it out. And I think probably a lot of financial institutions are like that. If you say, hey, I want to save, but I can't see it. Please don't let me see it. And I'm sure there are options out there for you. And if they don't, then of course you can just do it at another location or do it online. If you set up an online savings account, and I'm a real person. So I'm gonna tell you, if you set an online savings account, you're more than likely going to get a higher interest rate because if it's an online entity that does online. I was looking it up today. There are some online places that they have specials that they only deal online. And so you'll get a higher interest rate, and when you take that money out, it takes a couple of days to get. It's not an immediate return. So you really have to think about, okay, I know I'm not going to get it today. It might be tomorrow or the next day. Do I really want to go through, keying this on the app, and then I know I'm gonna have to wait for it. The need might not be there as bad as you think it is, when you have to wait for it. If you can wait it out, when it comes to impulse buying, if you can wait it out, go home and dream about it. Go home and think about it overnight. Don't do it. Go think about it overnight. And if it's still fire in your bones, then it's been sitting with you. But if you can wait it out, a lot of times it's just a moment. So when you're saving, you want to save with a goal in mind and you want to plan around that saving. So you have to know what it is you're looking to achieve. You have to know what are your goals so that you can plan around that. And then you need to know how much you're going to need for your goals. And when we talked about setting goals, we talked about those SMART goals being specific and measurable and, attainable and relatable and time bound. So, how much are you going to need? So if you say you want to save $1,000, that's how much you need. Now you break that down, and you set everything else around it. So if that's the goal, then that means that's important and you make that important. Goal is saving 10% every month. Okay. But just start.